Okay, good afternoon. It's about 7 after 4 p.m. Eastern time, and I thought after watching how the day played out, I owe it to myself to actually come back and do a review, whether anyone watches it or not. And I'm going to use my trusty little 1 minute chart here to kind of help articulate um, the um, rotations and where things made changes. Now I could get a little more granular with a tick chart or even 30-second chart or something like that. But it's a 1 minute, and and actually, I guess I'm saying this mainly for the first trade that I'd actually talked about being a potential trade right before I signed off on my last video. That was down at the 78.6. That it's possible it would reverse from there, and then I mentioned a little bit about Fibonacci and where I'd want to take off the position or take off some of the position. Now, how that transpired exactly, I don't know. I don't think had someone got long on the edge here or at even on 78.6 line that they would have been stopped out if they used a reasonable amount of risk. Not sure. Everybody's different, but let's just take a look at it. So I've got this set so it'll stay on top, and we come into we'll look at the profile here. And I'm just going to split it off right here for now. And we can see that I left before we had gotten down here in C. The VPOC, again, it was about in the middle of the profile. So C, obviously, if you look at this, really made a move to the downside. Would have been great to get short, but at that point, I'm not sure if you had a reason to know that. But let's just see how this would have played for going go with type of trade where we're going with we're still above the previous day's high, which is at this yeah, right here. It's right at the prior day's high right here at 81.25. Still above value, still within the IDVA. Someone could have used the IDVA low as well. Let me see. That may have shifted down. Not sure where that was. I can't tell right now where that was. It may have been right here. So that may not have been a place for a stop. It was below that. But that's one of the problems with doing a review or retrospective is that some of the dynamics changed. If you don't remember exactly where they were at the time, they may have changed. So the fact that C traded all the way down to 68 or to 69 even, this may have changed a little bit. I doubt that it changed that much because this is the volume value area. Okay, but it may have changed a couple ticks. But what I'm saying is that it could have been a place for a stop, quote unquote, structurally, right? So let's just see how this played out. So I had talked about it coming down to the 68. Let me just back this up a second. It was that I think when I left town here, we hadn't quite gotten back there to the 68.1. I said, I wouldn't necessarily trust it on the second time down. And so, it looks like it worked better than the one I'm about to show you. But again, that wasn't a trade for me. So there is this kind of H pattern people talk about. It's not necessarily my playbook. So, once again, back up to this zone, and I may need to change the color depending on where the market is and was at the times. But, we were below this zone, so it serves it right now to be red. So, okay. So this could have been short again. Sometimes these these areas have better results on the second time. After they've been permeated. It's like traders use an area again for a different reason, I guess. I don't know. So if they're doing it, I want to be doing it because I'm just a little guy. And the market moves because of the big players or the collective big. And that's just something that, why does it happen? Who cares? It happens, right? So, all right. So came down here and let me back up one bar. So, right at 78.6, you see that, okay? Now, it did open and go down to 79.25. So it went down about five. Like if you got long at, so let's just make this precise, okay? Because every tick matters, right? At least it does to me, in my opinion. Excuse my sniffles here. Excuse me. 80.50 was 78.6. Okay. Guess it's over here. I didn't need to scroll it up. So we opened. Now, did it open and go up and then come down? I don't recall. Okay. It's not important because this isn't that far away. And Let's see, 80-50, that's 5 ticks, okay? If you used, I have a, somebody I have traded with, they almost arbitrarily use a 6-tick stop. Structurally or not, they find a place to get in, 6 ticks away. She wouldn't have been stopped out. He wouldn't have been stopped out, okay? This would have come back up. Somebody trading this edge might not have gotten filled unless they started to front run them a little bit, but we're only talking about this 80-50 entry, okay? So here's what I wanted to talk about. You're saying, so what? It went up 6 ticks. Okay, well, depending on your watch trade, depending on how you trade, if you're a scalper, that's a nice little scalp for 3 ticks to a point, to 5 ticks to 6 ticks. May not have gotten out at 82, but let me show you what why I'm going through this. Okay, because we're using this Fibonacci level, and I've kind of talked about Fibonacci a little bit lately, and I'm trying to think where. I think from here, I'd have to see the video again of where if I drew it from that high. Yeah, I guess I'd have to, because I left before it came back up here. I think no, wait a minute. I'm a little confused of which high I drew it from, okay? But if we just drew it from here down to the 78.6, okay? See, from this low, that's 23.6. I had said that excuse me, at 78.6, that I'd get out at the 23.6 or the 38.2. Let's see. Let me try it from a different high. Might have been from this one. Okay. Well, we didn't quite get there. All right. So, again, if you're taking off 3 ticks a point, 5 ticks, this would have been a nice little trade. I was hoping it would come out exactly. I can't remember the high I used, or I'm sure that I must have put it at. Wait a minute. Let me think for a second. No, I used from here to here was 78.6, and I must have used the high up here to here. If it came down here, okay. So we came shy of it. Let's just say I was totally wrong. I mean, this long, if it worked, did not get to where I said I would have taken some off. Well, if I was watching the order flow and stuff, I might have taken some off sooner. I don't know how much it's staggered here. 20 seconds can seem like a lifetime if it's not moving but 1 tick and you realize it's not going any further. I don't know what happened. So, all right, there's that one. So let's go forward. Okay, so one of the reasons we're doing this is we're going to, now when we got down here, this is going to be red, right? Okay, well, again, you might have gotten stopped out. Depends on how tight your stops are. If you realized I better turn over and go short, looks like we're going to take out the early morning low, and I want to get on board with that. Excuse me one second. Okay, so you're trading right into some support, and you're running a bit of a risk. But, this is range extension, and range extension, sometimes it's only a couple ticks, but, we also had talked about all the poor low, all the lows and things underneath us, and even structure that is just kind of is going to be revisited most likely. All right, so we get down here to the bottom of this area. If you'd been sitting here with the limit, you wouldn't have even been filled. But that's not necessarily the point of this. You might have been waiting a little more conservatively because of the way it dropped. The point of this is just to indicate these areas are extremely powerful and instructive and very helpful and relevant. So you can see even inside of these things, if you're just a scalper, right? If you're a scalper, you could play these in different directions and do fine, again, this isn't something you just stop. It's like, oh, okay, I just trade the colors and the edges and then that's it. And it's all good. And I'll make a bunch of money. Yeah. I wish it was that easy, but it's not. There's no magic system. There's no because then you could just program this in, right? You could maybe have something draw and just program it in to take every edge. Well, I don't know. It might be successful. But here's something else. Here's something I want to show you too. You may have already seen it already. Oops, I want to use this. I already know where I'm going. This is a pattern I do like. Given the way it traded so kind of emotionally, it looks like, straight down and almost straight back up. But nevertheless, we have a head and shoulders pattern that you know, if you're thinking rotational before the FOMC, this is you know, sometimes you have those big fake out moves. That range extension down was big liquidation break, and then it recovered. So we're now into, this is now into D period, okay, which is also a time I like to trade at different time changes. That helps too. But let's look at something that I've shared freely earlier. See where how this did. Okay, I color this purple because that's just what I've been doing. Not bad. You know, not bad. And then you had quite a few rotations in here. You could have tried. This was too far too fast, you could say. Same with the to the downside. Here, let me get the Fibonacci stuff off of here because it was only relevant for that one trade and then the counter trade. Okay. So, you know, short, long, short, long. I don't know if you'd want to mess with this one, but you know, it's back in. Okay. You know, that's a lot of in and out, and your commissions can eat you up too. And again, it doesn't always play out so great with only a couple ticks of throw over from where you're wanting to get in, or heat. Heat's probably a better way to put it. But again, one reason I'm going through this, now we're going to move forward here because we're into D period. So let me move it here. Oh, I did it. Just a moment. Okay, we're in D period. So this is what D looks like on the profile. Okay. Now notice it closed up here and engulfed. Oh no, excuse me. No, it didn't. It closed above the open of C though. Wasn't necessarily. Yeah, you could argue it's an engulf. No, I mean, and engulf the body of C. That's the point I'm trying to make. Engulf the body of C. We have a really good low here, so you might want to consider that the upside is more the way to go. If you aren't still in from way down here, that was a possibility. Again, just trading the line, the edges, is not going to be as effective as combining this with some other technique, you know, or you're very good at reading the tape, order flow. So that can help. If you're see down here, you're going to be looking for possibly a bounce, possibly a reversal. In this case, we had a reversal. Market reversed and tore up back to the upside and took out the highs. But again, one of the reasons we're going through this is to help build confidence for anybody who watches these videos in these zones. There would be nothing like no better testimonial than somebody makes money themselves by saying, you know, I might watch those and I might use my techniques to get in. Okay, so now we're into 11:30. Okay, not a lot happened the first 5-10 minutes. That's E period. We're going to move this to here. Split it out at F. Okay, E period. E period traveled all. E took out the high, so we had this huge bar up. And now, I want to make this blue. And we could have made this blue. And, you know, somebody thought, oh, I'll short it here at 90 quarter. Let's see where that is. Well, that would have made a poor high. Now, I myself, I like to short poor highs and go long poor lows. Very often, there's a lot of movement before it goes back through. So let's see. That was at 90. Okay, well, actually, just because there's a long bar here, once again, if this was a 5-second deal, you know, you can make your money or a nice scalp in 1 second, 5 seconds, or whatever. I don't know how much it came back. You know, it may have came off that high and came all the way back down. That's when it made the low before it went up. I don't know. If you were there, you know, and maybe that was not a valid good trade. Maybe it just went up, hit 90, and just kept on going. And only flitted around during the change of the minute and just went your way 1 tick. I don't know. I wasn't there. So let's just keep watching. what happens at these levels. So now we're above the intraday high. We got making new highs. Okay, this was the favored area for a short. Okay, so if you believe we're going to come back up and continue higher, now we're into a new TPO. Okay, so that means we're opening right here. And it came down to here. Are you going to go long? It's the overnight high, the top of the R1. What's the order flow telling you? It's part of this volume distribution. It's the open of E. You know, a lot of things happened around here. Let's see. There it goes. It took a little while, but you know, I'm sure you could have made 2 points in there. Could have made a lot more if you hung in. You know, I'm not going to play it like, you know, I mean, if I took all these things that I put on the charts and maximized all the range that you could get out of a trade and every one of them that worked, you know, I'd be a bazillionaire. But I don't take every trade. I don't always read it right. Sometimes you get stopped out. You know, I'm not trying to make any illusions here. Okay. So let's see how this played up to the top of the edge and it reversed back down. So that's from 95.50 down to 92.50, 3 points down. Yeah, it took a couple minutes, but so you know, again, I should have turned this blue. Forgetting to do that. So we're blue here. We're now blue here. Unless you were going short, and now again, we'll get back under it obviously a little later on. So now this is blue. Okay, so we came out of this trading range, and we are still, one thing to consider now is look at this, you know, we've got a trend line. Might be something to consider. You know, what are your favorite indicators saying? What is the tick saying? What's the volume saying as it comes down here? What's the order flow saying? Are sellers getting stuffed at this level? You know, are buyers, are they giving up, and are buyers starting to lift the offer? Those are things to watch. Oh, could have come through and stopped you out. You had a 3-tick stop or something. If you got in at 92 quarter or 92 half, let's say, or 92 3/4. Oh, you could have gotten stopped out. Oh yeah, got stopped out. Did not work. But that was a nice looking opportunity. See, I wasn't here for this. So even though I know it went up later, I don't realize when it went. So this was the TPO change. Now I may have, let me pull this together. I may have noticed this because there are certain things that through experience I recognize about TPO changes. And I'll try to talk about it here. So G opened up here. Let me split this off just so I have a better feel for it. G opened up right here. And if I was trying to get long, where did we say? Let me see. 92 half. Wait a minute, that must be already in. Oh yeah, that was already into G. Okay. So G, no, I'm sorry, G opened up here, right? So G opened up here. It's hard to do this. And G opened up here, okay? Traded down. I don't know if I would have liked it. That would have looked weird with wait a second. No, G closed up here. G opened here. Sorry. G opened here. 45. One. Let's see. 95.25. It's right here. I'm a little confused because this is showing where F closed. This is where G opened. But we're all the way up here right at 1 o'clock. When we should be down here. Unless I got the times wrong. Okay, this is G. Sorry, this is G. This is G. That's what our problem is here. Let's see. I'll tell you exactly. So this bar, the open is Probably bored. The open at this bar is right at 89.75. There we go, 89.75. Okay. So G opened here, went all the way up here, came all the way down, 92.50. Yeah, I might have tried it. Again, hindsight's 2020 here. I might have tried it. And then, but the new TPO, well, let's see. It started up here. So, okay, when G came down here, it was right here, and it worked. This took you up, okay? Because this is H period. I got to figure out how to. I may have to put a timestamp in here to mark off these periods with a label. That'll help me going forward. So bear with me. You know, if you've made it this far in the video, it's already been going 21 minutes. I'm going to put timestamps for the letters. That'll help me going forward, because down here it gets down into minutes, and it's kind of tedious to find it. So it'd be nice to know exactly which bar. So we opened up in here in H, 94.50. H went up a little bit at some point, and then we moved on down. So we're in H now. All right, so that's where the mistake was made. We're back on, we're back on the road here. Just a moment. Let's see what H was and see if we would have taken that trade. Well, see if I would have. Let's see here. Split it here. H here. That just would have looked weird. To have a tiny little bar like that, and having already, I don't know. Might have taken that. Might have been stopped out. Like I said, you get stopped out. Might have. Not sure. Again, I'm not watching it develop in real time. Even though I got this minute thing, it's still hard to tell. You got to feel for the market. That, I think, is what's important. The whole takeaway from this whole little sidetrack is the importance of feel. It just takes time in front of the screens and markets, and the feel that you get for price action. You sometimes, and I kid you not, I can almost feel it, like when a market's about to break without any real data. You just feel it. You just feel it. And you can also feel it when there's about to be, short covering, or, I'm better at that than I am long liquidation, but you can just kind of feel it. So let's see here. Let's just move forward. We're coming up on, see, this was G. So, and I have had these memorized, and I forget them sometimes, which letter is which time. So let's just look split here. And I'm not sure I'm going to go through the entire day, other than just kind of go through this. Now, what I will say, I don't know, now that this is red, we're below it, right? I don't know if you'd want to short here, because there's a trend line. Now, there may be a short here. I'm not sure. Let's see where this is. 93.25. That's here. Looks like the short was here. I would have been expecting it to get up higher. I would have maybe waited. So I wouldn't have necessarily taken that. Plus, once again, very important, value's higher. Well, wait a minute. Did get there, didn't it? So let's see, 94. Maybe I'm in the wrong TPO again. I am, because I didn't even get up there. So yeah, I'm going to figure out how to put the letters on that chart. So going forward, let's see here. Now, I will say that J went all the way down here, but it went up there. Now, I don't know when it came back up, or when it went down. So this minute bar is either going to go flying through the roof and out the top here, and I'm calling this top of the gray area the roof, and I'm calling this trend line the roof, or it's going to turn and go down and then come up. I don't know. So if I was expecting maybe a short here, and I think right now this would be one of those where I'm going to say that's probably a 78.6 retracement from this high. How about that? It is. To quote Dr. Phil, 78.6. Now, are we going through it, or is it going to hold? Let's see. It's holding. There you go. That'd have been a nice trade. Okay, that'd have been a nice trade. Real nice trade. Real nice trade. I guess it went down first. Oh, here it comes back. It's going to keep going down. That's a beautiful trade. At J period. Okay. Must have been, well, that's FOMC. There you go. FOMC. That's 2 o'clock at 1400. So depending on what was happening, you might want to get out of this trade after just a couple points, because don't kid yourself. People, I believe that people know stuff before it happens. May even be baked into the market beforehand, before the market opens, for all we know. So, okay. When we went up here, notice how it respected that edge. I think that's important. This minute respected this edge. Doesn't mean you were trading them. Okay, don't make any mistake about that. That was right at the FOMC too, when this all was going to happen. So we had a little bit of a shakeout, then a plummet once the news got digested. And 95.75, you know, again, being FOMC, I don't know that I'd want to trade it. I guess that's some people trade the news, and yeah, look at that. So could have got it back in right here and expected it to come back up to the top edge and then maybe trade around in there a little bit. And that looks like exactly what had happened. Sure, it would have been beautiful. This would have been a nice place and nice time probably to try some things. There we go, on back up. So let's just kind of play out the day here. You know, again, once we're in here, you can make these red or keep them blue or turn them gray or get rid of them, just depending on the type of day. Because, you know, just because you're below it doesn't mean it's going to be resistance. And just because you're above it doesn't mean it's going to be support. It may not be much of anything anymore. There may be other forces that are much more important dynamically to consider than whether or not that ought to be a support area or ought to be a resistance area. Remember, the only thing that makes some support or resistance is people in the market. So very important to see, kind of keep an eye on the order book. I recommend using some things like Bookmap or Jigsaw tools. That's the market close. Bookmap or Jigsaw tools or something like that. I prefer Jigsaw tools. And you know, I also recommend Sierra Chart. It's a heck of a platform, and I've gone through a lot of platforms in my journey. So anyway, I haven't really figured out yet about being able to basically, you know, have someone get all the zones, or where, you know, until they learn how to do it themselves or create their own that are they trust more, that come to trust mine, or at least want to have them in a reference on their chart. You know, I found it difficult when I was in chat rooms to watch or trade off of someone's screen. I could listen to them, but I like to look at my own charts. There were some people that they had their broker's dome, and they would trade off of someone's charts. Well, first of all, you know, it's gonna be difficult to not have some kind of lag, or at least be sure you're not getting some kind of lag. And I will kind of work that out, whether it's possible or not, with Sierra charts. I believe it. I know I've done other levels, and I mentioned this before, but I'd like to be able to, anyone who subscribes to my trading room, for probably $20 a month, at least to start. You know, if demand goes up, or if it doesn't, I may charge more, you know, but right now I'm just thinking, you know, I just like to get some people to kind of work out what I'm doing here with them, and develop kind of a, you know, a little bit of a community. Or it may just be something where it's not very interactive, and I just kind of, you can listen to me or not. And I don't want my mic on all the time either. I'll probably just have something where I kind of like a CB radio. I can just open up the mic and then shut it off. So anyway, that's today. That's where we are right now. Thanks for listening. If you made it this far, it's a good half-hour video. You know, this is early days. Things are in development, and I'm still getting my legs as far as doing these videos and handling my own trading, because this is another job in itself, and it's not necessarily comes easy or is totally natural. So thank you very much.